Hello and welcome to Pro Trader Strategies Market Commentary for Friday, September the 30th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And having that out of the way, let's get this on. We've got a lot of economic data to kind of run over right now. And across the pond, French consumer spending came in like a little bit higher than expected at 0.7%, was expected to be 0.4%. We also got French preliminary CPI, which is Consumer Price Index, came in at negative 2%, was expected to be a negative 3%, so that was a little bit better than expected, seeing prices increase there. We also got the German final GDP came in higher than expected at 0.7, was expected to be 0.6%. And we also got in revised business inventories at an increase to 1%, was expected to be 0.5%. Talked about business inventories. Those are a little bit hard to really discern. An increase usually would kind of lead one to believe that they're increasing production and building up inventories in the expectation of sales. But if you see a big pullback in sales and you're wrong, then your inventories rise, and it's really not a good thing. So that one's really hard to really discern what's going on. Then we got final flash CPI for the European region, came in right in line with expectation at 0.4%. Core CPI came in slightly lower than the expected, 0.8% versus the 0.9% that was expected. And European unemployment rate upticked slightly to 10.1%, was expected to be 10%. Here in the United States, we got core PCE, which is the, why is this failing me? Personal Consumption Expenditures Price Index came in at 0.2%, right in line with the expectations there. We also got personal spending, came in a little bit lower than expected at unchanged, was expected to increase a little bit by 0.2%. And then personal income right in line with expectations at 0.2% increase. The other thing we got was a Chicago PMI, which is the Purchasing Managers Index, came in better than expected at 54.2. Remember, with that number, anything above 50 is expansion, and it was expected to be 52.1. On the other side, we had the University of Michigan Consumer Sentiment, a little bit better than expected at 91.2, was expected to be 90.1. It's pretty decent overall numbers there for the most part. We've got crude oil here moving a little bit higher by 27 cents. Basically, if we're starting to see better economic data points, you could expect crude oil to go higher as demand for that starts to increase. On the flip side, if the economy is doing a little bit better, we've got gold pushing a little bit lower by about $5 right now as we speak. It did test that 50-day moving average that we talked about. We did see a bit of a crossover. It's starting to look like it's going to cross back down again. But again, I think gold is going to continue to trend sideways. Looking at the bonds here, down over a point today, giving up all yesterday's gains. Really an engulfing candle here. We're seeing this across the board. I talked about an engulfing candle yesterday in the equities. Today, we're seeing an engulfing candle in the opposite direction in the equities, as we can see here with the Dow Jones Industrial Average. This one actually isn't showing an engulfing pattern here. We kind of started out a little bit higher, but we are a little bit higher than the open of yesterday, and it just precipitously sold off yesterday. Today we're seeing that push above there with the Dow Jones Index here, which is ticker symbol $DGI, up over 187 points right now. The NASDAQ, here's what I was talking about, more of an engulfing pattern. We started out below yesterday's close, and then have since rallied and are trading above yesterday's high of the day, up 31.5 points here on the NASDAQ/NQ. Then on the E-mini S&Ps, as you can see here, we are above yesterday's open and up 14.5 points, engulfing yesterday's open, or from open to close downside. We opened below yesterday's close and now are above yesterday's opening, and that has really engulfed that, up 14.5 points right now. If we can look at this on the daily pattern, our 15-minute chart, you can tell this one doesn't really look as much like we are above yesterday's high. I thought it looked like that on the other, but the open yesterday was right here. Should have been right around here actually. So we haven't quite made that. I thought it looked like we were making that on the other chart. But this is the 15-minute breakdown. Yesterday's open right here. We just sold off. Today we opened up and have started to rally. Opened up right around here. We started seeing the data points and continued higher. I haven't done a whole lot today. I'm preparing for today's webinar, which is going to be on poor man's covered calls, trying to find some opportunities out there. Might be doing one around TLT, because if we look at TLT on a daily chart, we can go to Apple and try and see if it'll switch over for me. And I'm looking at TLT because we had that big down move in the bonds that we saw. We can see TLT really push down. I'm going to be starting to look at maybe trying to add some longs here, because as I've talked about, I don't really see the Fed doing anything with rates, so it could come back up into this area here and start trending sideways, building up something here. So if I can do a poor man's covered call, sell my call above here, get long that underlying in the options, I'm going to be able to roll those calls out, collect some more premium, lower my basis on that. I'm going to be talking about that in this webinar. And the other thing is, if I get some kind of off chance that there's a scare of a rate hike, I've limited my downside risk. So this isn't as risky as the synthetic long that I talked about in the previous webinars. This is going to be a way where it's almost like we have a synthetic put in there with this poor man's covered call, and it limits our downside. If we get long this underlying, we're going to have limited risk to the downside. We're also going to have limited profitability to the upside because we're capping it with a short call. But by capping it with that short call, we also lower our overall basis, which is hugely important with these types of strategies. So go to ProTraderStrategies.com, sign up for that. It's going to be a great webinar, and we are going to be doing a little bit of a series on this. Then I'm going to be doing a poor man's covered put, kind of like we did with the synthetic longs and the synthetic shorts. So it's going to be a great webinar. I hope you guys get a lot out of it. Write to me at trading@ProTraderStrategies.com. Let me know what kind of webinars you want to see in the future, and you can follow me on Twitter at Wolfman's blog as well. That's all I got for you today. If you can't take that, take it easy.